Everyone. So welcome to intermediate income tax class. Good morning, Sridhar, Anchal, Vishakha, Vedant, Ashok, Maithili, Amar. Good morning, everyone. So what did we cover in the last session? We were on the deductions, right? We were on the deductions. So we had covered one lecture on the deductions. Anyone any queries in that before we start? Anyone any queries into that before we start? We had covered till 80D, right? Till 80D medical insurance premiums we covered. Students, you are you able to follow me? Yes, no, maybe. Vishakha, Anchal, Sridhar. Okay. So no queries. Fair enough. Now, what I have planned is, let me share my screen. Yeah, I hope the screen is visible. Excel file is visible, right? Okay. Now, let's start with ATC and we will make a small summary. You don't have to make it simultaneously because I will give you that file. I think all the class files are uploaded now, right? You would be able to access it. I'm making a summary here. Okay. I will give you this summary. Probably you cannot note it down right now because I will, as I will cover the section as soon as I will enter it here. Okay. So I'm just, all the summary is also in the book, but this will help you in questions. Now we had discussed section ATC. The first section we discussed was ATC, right? In section ATC, it is for certain payments. It is allowed for you, your spouse, your children, dependent or independent, right? And the limit was 150K. Limit was 150K maximum. Max limit 150K. Another thing was it is allowed to individual and HUF, resident and non-resident both, R and NR both, right? Then yes, this was the basic summary of this section. Okay, it was about certain payments you make. It was for certain payments you make. These are some of the columns that we have created. Now these columns will help you later on. Let me, because when we will solve the questions, it will help you a lot. Okay, so we will continue adding it on in this. Next, which section we discussed? 80. After ATC, we discussed ATCCC, right? ATCCC was about the ATCCC. Yes, here. It is about contribution to certain pension funds. Now, individual is eligible here, where the assessee being an individual, only the individual is here, right? It is for an individual. Individual return means resident and non-resident both covered. Everyone, resident and non-resident both covered here. Next is It is for the contribution to certain pension funds. Contribution to certain pension funds, right? Then it is allowed for whom? It is allowed for you. I think it is for your own account, right? Eligible assessed in the previous year, deposited in some chargeable net setup. I think it is for your own, you deposit. I think it is for self, but I will just cross check it. Okay, I'll mark it in yellow. And is there any limit in this section? Is there any limit in this section? 80 has a limit. As per now, this was a combined limit for this section. As per 80 I've written it here. Right? It was 80 CCC. Then we discussed 80 CCD. 80 CCD. This section is about pension scheme. It is available to individuals, right? And they do the contribution for themselves. They do the contribution for self, right? Then the limit is 80 CCD1 is covered above. 80 CCD1 covered above. Plus there was a limit on 80 CCD1. 10% or 20%, 10% of salary or 20% of GTI, and 10% of salary oblique 20% of GTI. Then we discussed 80 CCD 1B. There is an additional deduction 50K, and there is no limit of 10% or 20%. Then we discussed 80 CCD2. 80 CCD2. This is having limit of, although there is no such maximum limit of the amount, but 14% and 10%. 14%. We can write C, central government or state government employee, 14% of salary. And then if it is a others, it is 14% in new scheme and 10% in old scheme, and salary we compute the same way, right? So this is how we do it. So this is the limit. These are the three sections we covered. Then we covered 80 CCH. In 80 CCH, we discussed the employer contribution and employee contribution. 80 CCH was for the employee contribution. Employee contribution and employer contribution. There is no limit, whatever is contributed as per the Agniveer package. No limit. And 80 CCDH2 is for employer contribution. Again, it has no limit. right? 80 CCH is for Agniveer Corpus Fund. Agnipath scheme, right? It is again applicable to the individual only because individual is doing for self. Then the next section we studied was 80D, one of the important sections and examiner favorite multiple times. 80D is for you do it for self, spouse, and dependent children. You do it for self, spouse, and dependent children. Plus, parents are also covered here. Parents can be dependent or independent. So, plus, see, I am highlighting it differently so that you are able to compare from above, right? Dependent is the additional condition, and here parents can be dependent or independent. I'm writing in small, dependent or independent. Parents are also added here in this section, right? Now, for there is a limit for self, spouse, and dependent children, 25K or 50K. 25K, or if anyone is senior, then 50K. And for the parents, again, there is a limit of 25K or 50K. Next, preventive health checkup, there is a limit of 5K. 5K included in above limits, right? And only it can be in cash, others should not be in cash. It is for medical insurance. Who takes it? Individual and HUF. Individual HUF, right? So this is a summary till here. Everyone, are you with me till here? All the students? Multiple sections. 80cc is parlance with all sections. Any tactic from your side? 80cc is nothing but tells this condition. That's it. Anil, don't have to worry about 80cce. Okay. So this is the section. This is the heading. This is payment by, and this is the payment for, and this is the limit. Let's move to the next section. Outside the limit means allowed outcomes. Kambirka, I'm not able to, if I'm pronouncing your name correctly. 150 is combined limit. 150 is combined limit, right answer. Okay. Next. Okay. This summary sheet I will provide you. Don't worry. Don't need to worry to note down. Okay, before starting a session, do you know tomorrow is CA day? Tomorrow is 1st of July, CA day. Everyone knows, I believe. And I request all the students to join the class on time. We start sharp at 7 a.m. or the scheduled time. Please do not join late. Okay. Everyone, Ankita, Dhanlakshmi, Anil, Ashok, Amar, Vijay. Everyone, do you know tomorrow is CA day? Yeah, happy CA day. Okay, then Lakshmi. So just I'll take 2-3 minutes because you should have this knowledge as well, right? So I thought of discussing it with you in the classes. See, tomorrow is, yeah, tomorrow is CA day, and so our institute was set up on 1st of July, right? It was in 1949. So like it was set up even before the Constitution of India was adopted. It was in 1950, 26th January, right? So it was very important to set up because whenever economy grows, the CA requirement is there, right? So it was the requirement of it was a need of the hour to set up the institute. It was set up on 1st of July 1949. Now on that day we celebrate a CA, our CA day. Now I will say I'm not sure tomorrow. Do you have any class in the morning? By the way, I'm not going to have a class with you tomorrow. No, Anil. Tomorrow there is no class. Good. So what you can do is see at the near Anil. It was formed by the our own India got independence in 1947. Institute was in 1949. It was not formed by Britishers. It was formed by our Indians only, right? So I will say if you have time and if there is a nearest branch to you, ICI has branches, right? You should tie up with your local branches as well because if you get connected with the local branches, then you get a lot of exposures. Branches do a lot of activities for the students as well. So when you will get involved into those activities, right? In many places the marathon is there, right? In fact, tomorrow I also am going for the marathon, right? So there is a CA day, there is a marathon. So many branches plan it, like our local branch is also planning it. So I will say, please go to the institute branches, get connected with them. You will feel a lot of energy. You will meet your peers. You will meet the other chartered accountants, right? So you will feel happy and you will get to know more about the institute. So please do take out some time tomorrow. And if there is a branch that is whatever nearest branch to you, please try to visit that. Ideally, there will be some program in every branches, right? So make sure you do it. So it will help you to connect better and to know more about the institute. Okay. So let's start with the today's session. After ATD, we have ATDD, section ATDD. See, if you will see the series, D series is about the disease. In a sense, it was for medical insurance. Now the next section is ATDD. ATDD is for the dependent disabled. It is for dependent disabled. Who is dependent disabled? See, first thing they are saying is the person is dependent. Second thing they're saying is disabled. That is DD. Now it is available for the individual HUF who is resident in India. You have studied the residential status? You have studied the residential status, everyone? Right? It is for individual HUF. Earlier, the condition was not there in resident in India in other sections. It is for individual HUF resident in India. Right? So I can add it here. It is for individual HUF resident in India, ATDD. I will continue adding like this here. Individual HUF resident in India. Again, it is allowed in the old scheme, needless to say, because only 3 deductions are allowed in the new scheme. One was for ATCCD2, another one was for Pagnivir ATCCH2, and one more we will study ATJJAA. Now, if you pay, now tell me, it is for the dependent disabled. If you are disabled, then you are not covered here. You are not covered here. You are covered in ATU. There is one more section we will study, ATU. You are covered in ATU. It is for dependents disabled. It is for dependent disabled persons. Who all will be your dependents here? Your self, exclude the self. What is the normal thing we study? Spouse is counted, child is counted, your parents were also counted in ATDD. There is one more category I need to add. Which one I should add? What do you think? What is the logical person, next logical person I should add? Who is close to me? Brother, sister, right? I will add brother and brother, sister, right? Siblings, correct. These all are dependent because this is dependent disabled. This is dependent disabled. Now side by side, I'll prepare here notes, right? So it is easy for you to compare, right? Here self, your self not covered here. Self not covered. It is an ATU. So what is the what is good? It is dependent. Another thing is brother and sister are added here. Is your daughter-in-law covered? Is your daughter-in-law covered? Children's spouse? No. Whatever is written is only specifically covered, others are not covered. Next. In this section, deduction is a flat deduction. Only in case of disability, you will find the flat deduction. It is a flat deduction. So what is the meaning of flat deduction? Flat oblique fixed. I will write here flat oblique fixed deduction. What is the amount of deduction? 75K oblique 125K. 75,000 is the normal amount. 125K is if there is severe disability. Means disability is for 80% or more. The disability stage is 80% or more, then you get a higher deduction of 125K. Now, what is the meaning of flat deduction? Let's suppose for your dependent spouse who is a disabled, you have incurred expense of your actual expenses just 10,000. You normally get $10,000. So sorry, 10,000 or 75,000, whichever is lower. But here still you will get 75,000 deduction. Irrespective of the actual expense, even if your actual expense is nothing, 100, 200, 10,000, 20,000, still you get deduction for 75,000. This is flat deduction. Dependent disabled. Who is disabled also? That is also defined, Anchal. I'm writing the important things here so that you also understand it. Else we will go everything from the book as well, right? So it is for there is a flat deduction. It is flat deduction. Now, if you have more than one disabled, if you have more than one disabled, still, if you have more than one disabled person, now the limit is not per disabled. The limit is not per disabled. 75K oblique 125K limit is for the entire return, entire tax return. Have you noted down? I hope it's clear. Okay, I'm switching. So the limit is here, it is a flat deduction, and the limit is 75K oblique 125K, right? The word flat is important. Flat oblique fixed is important. DD is for dependent medical treatment of dependent disabled. Clear? Next. ATDD. There is no such condition given here that cash payments are not allowed. See, Anil, tell me, are even the payments, tell me, I said you there is a flat deduction. Are the payments relevant? Are the payments at all? Let's suppose you have made 0 payments, still you will get 75,000 because the person is disabled. Getting it? So the payments are irrelevant here, whether you make in cash or you make no payments, irrelevant. So that's why if that payment is not relevant, while there will be a provision for cash or non-cash. Until just hold on. Let me cover. All your queries will be answered. Right? Let's see the book. Deduction in respect of maintenance, including medical treatment of dependent disabled. You can see the word said DD. D means dependent, D is disabled. You will remember like this. It is for the individual HUF who is resident in India. It is for the individual HUF who is resident in India. Payments qualifying for deduction, any amount paid for the medical treatment, training, rehabilitation of dependent being a person with disability. You pay for the medical treatment, training and rehabilitation of the dependent being a person with disability. So you are paying here for the treatment. You are paying here for treatment. Right? You're paying here for the treatment. Next. Paid or deposited under a scheme framed paid or deposited under a scheme in this behalf by the life insurance corporation or any other insurer or the administrator or the specified company for the maintenance of dependent being a person with disability. If you are maintaining a scheme, it is the premiums that you pay. For the scheme, what you will pay? You will pay the premium. Sorry. It is for the premium that you pay. It is for premium. If you pay any premium for a scheme in this behalf by the life insurance corporation or other insurer or the administrator or the specified company for the maintenance of dependent being a person with disability. If you have taken an insurance policy for the maintenance of dependent who is disabled, then those treatment expense or the premium expense will qualify for deduction. Clear? Next. The benefit of deduction under this section is also available to assess the incurring expenditure on medical treatment of the person suffering from autism, cerebral palsy, and multiple disabilities. There is a flat deduction. There is no maximum limit. The quantum of deduction is 75,000, or in case of severe disability, 80% or more disability is 1,25,000. Vedant, I'll come to your questions. Let me just complete it. Then I'll come to all your questions, right? The scheme would provide for the payment of annuity or lump sum amount for the benefit of dependent. Let's suppose if you have taken an insurance scheme, if you have taken an insurance scheme, now that insurance scheme is providing the annuity. Let's suppose after you attain a specific age, there will be annuity or a lump sum payment for the benefit of dependent, because the policy is for the dependent with being a person with disability. In the event of death of the individual or member of HF in whose name subscription was made, right? The policy will provide like this: if there is a death of the subscriber, the amount will be paid to the dependent disabled, or on attaining the age of 60 years or more. On attaining the age of 60 years or more, the member of the individual member of which the payment or deposit to the scheme has been discontinued. See, normally you pay premiums till the age of 60 years. After you attain the age of 60 years, the payments will discontinue, right? There is no premium to be paid. So, and the assessee must nominate. What the assessee should do, they should nominate either the dependent. Now there is any insurance policy is there, you appoint a nominee. They should nominate either the dependent itself or a trust to receive the payment on his behalf for the benefit of dependent being a person with disability, right? So what type of insurance policy will be there? On the death, death of the individual member of HF, the name subscription was made. Let's suppose Mr. A has taken policy for his son. Mr. A has taken policy for his son. If Mr. A dies, who will get the money? Who will get the money for this policy? Son will get the money. Son is disabled. Son is disabled. If Mr. A dies, son will get the money. Next thing, if they say if on attaining the age of 60 years or more by the individual, if Mr. A attains age of not Mr. A, but the son. If son, subscriber is taxpayer. Okay, if Mr. A attains age of 60 years, then premiums are discontinued on this policy. Then premiums are discontinued, right? And Mr. A should nominate Mr. A because he is old. He can because Mr. A is old. He is 60 years or more, right? Now then Mr. A should nominate either the dependent disabled itself, dependent. Here in this case, Mr. A should nominate son or another trust to receive money for benefit of son. This is the requirement. Because you have taken a policy for the dependent, the money should be used for the benefit of dependent. Clear? This is the meaning of that requirement. For claiming the deduction, assessee should have furnished a copy of the certificate issued by the medical authority. A medical authority will issue the certificate under the Persons with Disability Equal Opportunities Protection of Rights in Full Participation Act, along with return of income under section 139. The disabilities defined in this act are covered. The disabilities defined in the Disabilities Act 1995 is covered. Disabilities defined under Disability Act 1995. Right? There are 7 distinct disability. If there is a blindness, low vision, leprosy, hearing impairment, locomotor, mental retardation, mental illness, others, whatever are specified under this act will be covered under this disability, and you need to have a certificate. Where the condition of disability requires reassessment, it means, let's suppose a certificate was issued for 3 years. The person is having disability for 3 years. Now, when the period specified in the certificate is over the fresh certificate should be taken by the after the expiry of the period mentioned in the original certificate. You need to take a fresh certificate. Deemed income. Now, deemed income. See, small notes I'm writing, you can even write in the book. Okay, these small notes, when I'm explaining the condition, maybe it will not make so much relevance in the notebook. You can write in the book. Deemed income. If it is the crux that I'm writing, if disabled person expire, you get money from insurance company. If disabled person expire, you get money from insurance company. It is taxable. If you expire, the one who has taken the policy, disabled person receives money, it is exempt. If the disabled person receives money, it is exempt. If you receive the money, disabled person expires, then it is taxable. You need to see who is receiving the money. If disabled person is receiving, it is non-taxable. Otherwise, it is taxable. Deemed income. If the dependent, being a person with disability, pre-deceases, if the dependent pre-decease dies before the individual or the member of HF in whose name subscription was made, then it is taxable or non-taxable. If dependent is dying, the person is receiving the money, it is taxable. The amount paid or deposited under the said would be the deemed income. Whatever money you will receive from insurance company will be taxable and chargeable in the hands of assessee, individual or member of HF in the previous year in which such amount is received. However, such deeming provisions would not apply to the amount received by the dependent. Deeming provisions of income would not apply to the amount received by the dependent. Being a person with disability, before his death by way of annuity or lump sum under the scheme mentioned, or when the individual or member of HF attains 60 years or more, the payment of deposit has been discontinued. Who is a dependent? I told there is spouse, children, parents, brother and sister are additional here. Who is wholly or mainly dependent? Wholly or mainly dependent on such individual and who is not claimed? No, not claimed deduction under section 80U. Who has not claimed deduction under section 80U? You claim the deduction for yourself under 80U, that's why you are not covered here. For HF, any member of HF who is wholly or mainly dependent on the HF, not claim deduction under section 80U. Clear? Now coming to your questions. Anchal says dependent disabled means someone is blind. I've already clarified who is a dependent disabled. Cash payments irrelevant, payments are irrelevant. What type of disability is covered? Anchal, I think I've covered it. Premium is covered under section 80C. Now you tell me, premium for life insurance is covered. I agree. Premium for life insurance is covered here, covered in 80C. Now, if you are paying any policy, see specifically if you are paying any policy for the disabled, you can take separate policies. Let's suppose if you have one policy. Now tell me, if you have one policy, will you take the benefit in 80C or 80DD? For the disabled person, you would like to claim the benefit in 80DD. It's better because you get a flat deduction, and 80C already has a very low limit of 150K. So you see which section you're getting specific benefit, you will take there first. Vedant. Sir, can we take actual deduction of actual expense ignoring the deduction? Anil, can you go against the Income Tax Act? The answer is no. In about 2 cases where son was receiving the lump sum or annuity in case of death of father, okay, son is receiving. When he attains 60 years and receiving lump sum, in both cases it is taxable. When son is receiving, then nothing is taxable. When the dependent disabled receives the money, it is non-taxable. Only when the taxpayer receives the money, it is taxable. Anil. Okay, clear? We are going very slow today. I think it is taking a lot of time. We have also completed the summary. Can I move on? Okay, I'm moving on. If any noting is left, you can always copy it later on. I have uploaded all the notes of the previous sessions, right? I was not able to upload Excel, so I have converted it in PDF and then uploaded it. Next section. This example you can do. These two examples are very simple examples. It is the first example they have taken for the grandfather. Is grandfather covered in ATDD? Is grandfather covered in ATDD? The answer is no, it is not covered. Again, then they are asking in the new scheme. In new scheme, anyways, the deduction is not allowed. So if it is for the defendant father, then it is allowed. Father is covered. ATDDB. Next section, ATDDB. I think DDB is the last section in this series of DD. Yes, then there will be new series starting, ATE. ATDDB. What is ATDDB? It says medical treatment. Again, it is for the medical treatment of specified disease. It is for the medical treatment of specified disease. It is only for the specified disease. Arun sir, now hold on. I'll take all the questions at once, okay? Let me start the next section. Otherwise, we will not be able to move forward. I'll take all the questions. Just hold on for some time, okay? Medical treatment of specified disease. Now, it is allowed for self, spouse. Here, self is also covered because it is not for ATU, right? It is not for disability. Because what? See, ideally in ATDD, self would have been covered, but there is a specific section for self, ATU. That's why it was not covered. It is for the self, spouse, child, parent, brother, or sister. Now, it is for the individual HUF resident in India. Who can claim this deduction? Individual or oblique HUF. HUF means HUF for any member, its member. When is HUF treated as resident in India? When is HUF treated as resident in India? Can anyone tell me? When is HUF treated as resident in India? When the Karta is in India, control, right? We see the control. Karta, where the Karta is there, right? Karta of the HUF. Next. So, it is for the specified disease. Again, they are wholly or mainly dependent. It is for the dependents. These persons are dependent on you. These are dependent. See, I'm not writing for the HUF. HUF means any member of HUF. Wherever HUF is there, then it is for any member of HUF, right? It is for dependent. Similar type of section, but different disease, it is there, right? Now, what is the amount of deduction? Amount of deduction is expense, actual expense on medical treatment, or or maximum 40,000. Actual expense subject to maximum of 40,000. The limit is 1 lakh, 40,000 oblique 1 lakh. If it is the person for whom, if person for whom treatment is done is senior citizen. If it is senior citizen, then the limit is 1 lakh. Right? It's very simple. Let's see it in the book. It is for the medical treatment again. It is, that was for disability. Now it is for not for disability, it is for specified disease. Individual HF, the resident in India. The deduction is available to individual medical expenditure incurred on himself or dependent. It is also available to HF for any of its members. It is for the spouse, children, parents, brother, sister of the individual or any of them wholly or mainly dependent on such individual for its support or maintenance or member of HF. Person qualifying, payment qualifying for the deduction amount actually paid for the medical treatment of such disease or ailment as specified by the board. Whatever disease are specified, it is for the specified disease. Dependent or dependent? No, dependent spelling is, have I written here somewhere ENT? Anchal. Can everyone type? Can you type it to everyone? Like everyone, please do type your messages to everyone in the meeting. So it will help better others to understand the queries as well, right? No, dependent, whether you write dependent means DP and ENT, whether you write here A here or E here, that is just the spelling. Okay. There is no difference. Maybe they may have used different spelling, but yeah. Right? Okay, we do not, you do not have an everyone option. Okay. Quantum of deduction is whatever is the actual expense, amount actually paid, or 40,000, whichever is less. Or in case for whom the amount is paid is senior citizen, then it is 1 lakh or less. Then it is 1 lakh or less. Clear? Next. The deduction under this section shall be reduced if you receive any reimbursement from the insurance company. Then you need to reduce that amount. You cannot take actual expenses for that. You need to reduce your amount of deduction for that. Right? Maximum deduction. What is the maximum deduction? This is the maximum limit, not per person, Arun Sagar. It is not per person, right? This is the maximum. If you receive any insurance company reimbursement, you reduce your amount from this, right? If you receive any insurance company reimbursement, the deduction is reduced. Maximum is 1 lakh and 40,000. We have already seen. Condition. No such deduction shall be allowed unless the assessee obtains the prescription. You need to obtain, I said specified disease. It is for the specified disease. Specified. Sorry, I'm writing it here like this. It is for specified disease, right? Either you take a prescription from the neurologist, oncologist, urologist, hematologist, immunologist, or any other specialist as will be prescribed. You need to have this prescription in hand. Okay, clear? So this is simple. It is for the specified disease ATDDB. It is for the medical treatment of specified disease, right? The deduction as actual expense. Actual expense max 40K or 1 lakh for senior citizen, right? So this is 80 DDB, right? 80 DDB limit is reduced if you receive any reimbursement, that I have already clarified, Anil. The limit is reduced if you receive any reimbursement from the employer or the insurance company, correct? Now we are done with 80 DD series, right? So what we discussed here, 80CCC, we discussed 4 sections in 80CC series, 80C series, 80C for payments, 80CCC for pension funds, 80CCD for the pension scheme, CCH for the Agnipath scheme. Then there are another set, 3 deductions in 80DD for the disease. One is for medical treatment, is for dependent disabled, it is for the specified disease, right? Now we will discuss, I think, 4 sections in 80E series. 80E for the interest. Let's start. Section 80E. 80E. Right? So 80E is for the, this series is, E series is for the interest. It is for the interest on loan taken for higher education. Interest on loan taken for higher education. Now it is for the individual only, not HUF. HUF not covered here. It is for the individual only. If he has taken a loan for, if he has taken education loan, if taken education loan. What is higher education? 12th class is not called, after your schooling, whatever you do is higher education, right? If you take any deduction for the higher education, if you take any loan for the higher education, whatever interest you pay, deduction is available for interest paid on loan for higher education, not for principal. Not for principal. Okay. Not for principal. Now, if you repay the loan, whatever interest you pay, that you will claim as deduction. The loan is taken for self plus relatives. They use the word self plus relatives, then they define the relatives. I can write it directly. Self, spouse, children, or legal guard, or for whom you are the legal ward. For whom you are the legal ward. There is a time limit here. Whatever interest, let's suppose you have taken a loan for 10 years. Will you get a deduction for all the interest of 10 years every year? The answer is no. Time limit is 8 years. Let's suppose loan is for 10 years, you will get the deduction for first 8 years. The last 2 years, you will not get any deduction, right? Another, there is no limit on number of children. If you have 3 children, you take the deduction for 3 children. See that here is, there is a time limit for the number 8 years, right? But is there any amount on the limit on the amount? There is no maximum amount limit. There is no maximum amount limit. Whatever interest you have paid, you can claim as a deduction. The time limit is 8 years. Clear? I hope it's clear till here. Okay, add one more line here. Here, brother, sister, brother oblique sister or parents are not covered. See, if you will have these types of analysis with you, this will help you to remember a lot. Okay, now let's write it here. ATE, it is for the interest on loan taken for higher education. Now it is for the individual only. Payment is for self, spouse, children plus legal, for whom you are the legal ward. Brother, sister, parents are not covered. Let me write it specifically here. There is no maximum amount limit, but there is a limit for the time limit. Time limit is 8 years. There is no limit on number of children. Are you clear till here, everyone? Have you noted down? Okay. The loan must have been taken for the purpose of pursuing higher education or for the purpose of pursuing higher education of his or her relatives. The loan must have been taken from a financial institution or approved charitable institution. Who is relative? Your spouse, your children, or the student for whom individual is the legal guardian, right? Brother, sister, not covered. But for brother, sister, if you are the legal guardian, then it is covered. What is higher education? Any course of study, including vocational, pursued after the senior secondary examination or equivalent from any school, board, university recognized by central government, state government, local authority, or any other authority recognized by a central government, state government, or local authority to do so. Therefore, interest on loan taken for pursuing any course after 12th or its equivalent will qualify deduction for ATE. Vishaka, if you have taken 2 loans, I think both the loans will qualify as. There is no limit on the maximum amount here. Just these conditions should qualify, right? Period of deduction. Now, how they write here? They write here 1 plus 7. Instead of 8, they write as 1 plus 7. The first year in which you claim the deduction is stated as first year. The next 7 years it is allowed. So it is 8 years. The deduction is allowed in computing the total income in respect of initial assessment year. The assessment year relevant to previous year in which the assessee starts paying the interest on loan, and 7 assessment years further, immediately succeeding the initial assessment year or until the interest is paid fully by the assessee. So it is for 1 plus 7 years, whichever is earlier. If the loan is for 5 years, you will get deduction for 5 years. Loan is for 10 years, you will get deduction for 8 years, whatever interest you pay. Now they say you should have taken the loan from the approved charitable institution or financial institution. It means institution established for the charity purpose, approved by prescribed authority under 80G. What is a financial institution? It is a banking company. You take a loan from any bank or any other financial institution which is notified. If you take a loan from your friend, can you claim a deduction? If you take a loan from your friend, can you take a deduction? The answer is no. So you can write here, loan should be from financial institution or approved charitable institution. Loan should be from financial institution or approved charitable institution. Clear? This is about 80E. Please see this question. Mr. A has taken 3 education loans. Mr. A has taken 3 education loans. Mr. B has taken 3 education loans. For B, son of B, daughter of B, they are qualifying. We need to calculate the deduction 80 for the old scheme. They have taken the loan for the MBA, BSc, BA, all 3 qualify. Amount of loan is 5 lakh. Loan repayment is this much. Only for interest deduction is allowed. 20K is allowed. 10K is allowed. 18K is allowed. 20 plus 10 plus 18, 48K will be the deduction. Clear? 48K will be the deduction. Yeah, whenever you start the paying the interest, from there the ATL start, right? Whenever you start the repayment, not from the year you take the loan, right? Okay. Students, we are doing one thing. We are taking a break early today, okay? Although it's 1 hour, we are taking a break 15 minutes early today. We are just taking a 10-minute break now, and then we will continue, okay? Is it fine, everyone? Can we go ahead with it? Okay, so we are taking a break early today. It's 8:04. We will start at 8:14, okay? Please come in 10 minutes. Thank you. I hope you are enjoying the session, right? The summary we are creating will help you a lot. We will do one question as well today. We'll see, okay? Thank you. Are you back? Okay, so I'm starting. One second. Okay. Next section, we're done with ATE. ATE is for the education loan. Next section is ATEE. So there are two sections that we are going to study, ATEE and ATEEA. Let's study the ATEE first. ATEE. Deduction for interest payable on loan borrowed for a residential house property. If you have taken a loan for the residential house property, is deduction allowed under section 24B? Is deduction allowed under section 24B? Right? Now, if you are taking deduction under section 24B, what is the limit in section 24B for self-occupied properties? 2 lakhs, 200K. Now, over and above, you can take under this section. Over and above, you can take under this section. Available only if individual exercises the option of shifting out. It is for an individual. ATEE. It is for the individual. Eligible assessee is individual who has taken a loan for acquisition of residential house property from any institution. Interest payable on the loan would qualify for such deduction. So, it is for the individual. Loan taken for residential house property. If you are paying the principal, then which section deduction is allowed? ATC. Interest paid deduction is allowed. Right? Now, it is loan for residential house property. Interest Now, next condition is value of house is less than 50 lakhs, less than equal to 50 lakhs. Value of house is less than equal to 15 lakhs and the loan is less than equal to 35 lakhs. Plus, assessee should not have any residential house on the date of sanction of loan. Whenever the loan is being sanctioned, there is no other residential house in your name. The loan should be sanctioned during the previous year 16-17. Is the section relevant today? Is the section relevant today? Everyone, what do you see? Is the section relevant today if the loan was sanctioned? Lakshmi says no, Achal says no, Amar says no, Sridhar says no, everyone says no. Tell me, if you have taken the loan in previous year 16-17 but you are paying interest today, if you have taken the loan during that year but you are paying interest today on that loan may be for 20 years, you are paying interest on that loan today, is it relevant today? Now I am asking again, is the section relevant today? The answer is yes. So this section is relevant today. Now loan should be sanctioned during previous year 16-17. It means new loan sanction will not qualify, but our old loans will qualify for it. Because 8 years. Anil, who said 8 years here? I haven't said any 8 year condition here. 8 years condition was only in the education loans. There is no 8 year condition here. There is no 8 year condition here. Whenever you pay the loan, See, don't assume any condition until I say it or the section says it. Period of benefit. That is the complexity in the deduction chapter. We try to confuse with the other sections, and that is when the confusion arises. Period of benefit. The benefit of deduction under this section would be available till the loan repayment of loan continues. There is no 8-year limitation. There is no 8-year limitation. Quantum of deduction. Deduction allowable is 50,000. Maximum deduction is 50,000. Under section 80 is over and above the deduction of up to 200K available under section 24 for the self-occupied property. First you take under section 24 for the 200K, rest you can take it here. But here the maximum limit is, if you paid the interest of 2,30,000, how much deduction will be allowed here? If you have paid the total interest of 2,30,000, how much deduction will be allowed under this section? 30K, right? If you paid, let's suppose interest paid is 2,30,000. First you will take 200K as loss for self-occupied property. Then 30K will, or 50K, whichever is lower, equal to 30K is 80 EE. Clear? Yes, we can claim deduction until we pay, right? These conditions I'm not writing on the Excel, you can cover it from here, okay? I'm just, maybe I can just copy paste for the notes. I don't want to spend time on this. If you want to write down, you can leave the space and you can note it down later on. Right? These are the conditions. Next. These old deductions are always on payment basis, Arun Sagar. Whenever you pay the interest, it is for the repayment. If there is accrual, the repayment hasn't happened, how you can take the interest? It is on the repayment of the interest. Clear? No deduction under any other provision. If you are taking deduction under this section, for the same interest, no deduction will be allowed under any other provision. That is simple. Now loan can be taken. Now it was one more condition here. Where is there's even loan is taken from the financial institution or any housing finance company. What is financial institution? It is a banking company or any other banking or housing finance company. Loan should be taken from the financial institution or housing finance company. Housing finance company is a public company formed and registered in India for the main objective of long-term finance for the houses in India. So, loan is taken from financial institution including housing finance company. Clear? Next section is very much related. See, example is very simple. They have taken a loan of 45 lakhs. So they have taken houses. They have taken a loan of 35 lakhs. Loan rate is 11%. Can you calculate 35 lakh into 11%? 35 lakh into 11%, it will come 3,85,000. Now up to 2 lakh you take under section 24B. Then the balance is 1,85,000. 1,85,000 or 50K, whichever is lower, it comes 50K. That is a deduction under section 80EE. Clear? Fairly simple example. No need to do in detail. Next section is very much related. Okay, let me write the note here. It is for the loan. It is not payment for anyone, right? It is for the interest on loan taken for residential house property, right? There is no maximum limit here, no maximum amount limit. Sorry, 50K limit is there, 50K maximum limit. No time limit for loan repayment. Let me write here, no time limit. No time limit of 8 years. Clear? Let's do the next one, 80 EEA, I think. EEA, right? This is also for house property. EEA is also for the residential house. Now, what is the difference? Hey, there only previous 16-17 was covered, right? Now it will be for further financial years. Again, the logic is same. Individual, it is for the individual, right? You have taken a loan from the financial institution, interest payable on loan will qualify. Now, there, if you will see, in above the condition was value of house less than equal to 50 lakhs. Now, here the condition is of stamp duty value, not the actual sale price, actual purchase price. Here the stamp duty value is 45 lakhs. Here the stamp duty value is 45, less than equal to 45 lakhs. It is not the actual purchase price. It is the stamp duty value. Please make a note of it. It is the stamp duty value. Right? It is the stamp duty value. Next, there is no condition of amount of loan. The individual should not be eligible to claim 80 That we already know because these sections are not overlapping. There is no condition of the amount of loan. Right here. No condition on amount of loan. No condition of loan amount. Clear? Next, loan should be sanctioned by the financial institution between 1920, 21, 22, 20, 1920, 2021, 21, 22 during this period of 3 years. During this period of 3 years, the loan should be sanctioned. Okay. The individual should not own any other residential house on the date of sanction of the loan, that we already know. So these are the conditions. Let me just take a quick screenshot here. Period of benefit. The benefit of deduction under the section would be available for interest payable for each assessment year. Whenever you will pay the interest, there is no limit of 8 years. Now the deduction amount is 1,50,000 here. And that is over and above you get in under 24B. So here the deduction amount is, there is a higher limit, maximum 150K, 1,50,000. Clear? Then no deduction under any other provision. If you are claiming deduction under this section, there will be no deduction under any other provision. Same, the loan should be taken from the financial institution, including a housing company. Anil, the 80 EEA is for assessment previous year 1920, 21, 22, 20, sorry, 2021, 21, 22, right? Now this is the new regime and old regime. In the new regime, is deduction allowed? In the new regime, in case of self-occupied property, 24B is also not allowed, 80EA is also not allowed, right? There is no deduction allowed for 2 lakhs, no interest deduction on 24B for the self-occupied property, no deduction under 80EA. But if it is a let out property, can you take deduction under 24B? The answer is yes, you can take a deduction under 24B, right? However, the loss from house property cannot be set off against any other head that we know in the new scheme. In the new scheme, house property loss cannot be set off against any other head. Even the 2 lakh is not allowed. Then there is a no deduction under 80EA. If it is old scheme, self-occupied property, you get 2 lakh under 24B, then balance 150 you can get it here. Till 150 you can get it here. Then in case of let out property, there is no limit of 24B, but there is an interhead set of limit of 2 lakh, right? Then above 2 lakhs, you can claim under this section up to 150K. Very simple. This is the interplay between 24B and 80EEA. Are you with me till here, everyone? Please confirm to proceed. Okay. Last section in the interest series is 80EEB. Okay, before that, let's make out a summary here. It is interest taken. Maybe let me write here the financial year. It will be better for you. It is previous year 16-17. It was for 19-20. It is for financial year 2019-20, 2020-21, and 2021-22. It is for the individual again loan. The limit is 150K. If a residential house is purchased in this financial year, no, then there is no deduction under this. See, it is not Dhanlakshmi. It is not about the loan purchase. It is about the when the loan is. It is not about the home when the house is purchased. It is when the loan is sanctioned. Getting it? The condition is on the loan sanction. Under the old regime, 80EA and 24B impacting set off and carry forward of laws at the head of right of. Yeah, in 24B is there. Anil, I couldn't get you what you are trying to summarize. It is given in detail in here, right? I'm not able to get you are trying to summarize here. In old scheme, there is no 2 lakh allowed in the in the new scheme in self-occupied property, there is no 2 lakh allowed, but in old scheme it is allowed. Then and even in old new scheme, 80A is not allowed. In old scheme, it is allowed, right? And in the old scheme, it is a let out property up to 2 lakh. You can claim as a loss here, and then more than 2 lakh, you can claim it here, up to 150K. Okay. Now, next is electric vehicle. If you remember, during past few years, the government promoted the electric vehicles a lot. Then they gave this deduction 80EEB. 80EEB. Okay, before proceeding, let me clarify the queries. Anil, you're confused under the interhead set-off. What is the confusion in the interhead set-off? Quickly, tell me. What is the confusion in the interhead set-off? You have a loss. Let's suppose it is a no limit 24B, entire interest is allowed as deduction to 73 of the loss. In case house property loss is more than 2 lakh, interest of 24 you can claim under section 2 lakh and extend here. Fine. Let's suppose it is a let out property. Your rent received is 50K. Your rent received is 50K. You have paid interest of 4 lakhs. You have paid interest. I'm ignoring the 30%, okay? I am ignoring that 30% for now. Please do not make it an issue. I am ignoring the 30% condition for now. Do not make it an issue and come back to me again and again. 50k minus 4 lakh, it is coming 350k negative. Now, how much loss I can set off? Let's suppose there is income from salary. There is income from salary. Can I set it off with salary entire 350k? The answer is no. I can set off up to 200k. So can I do one thing? Instead of 4 lakh here, I claim only 250k here. I claim only 250k here, right? So 550k minus 250k will come 200. I have claimed 250k here, but how much balance is left? Balance interest left is 150k. That 150k you claim under ITL. So you are able to get the entire interest deduction. You are able to get the entire interest deduction. You claim balance under 150k here. Is that clear, Anil? Anil, quickly confirm, yes or no? Everyone clear? If I will move forward, then probably do not ask me to come back to this example. If still something is unclear, please tell me. Okay. ATEEB, it is for the purchase of electric vehicle. It is the loan payment, interest on loan, taken for purchase of electric vehicle. If you purchase an electric vehicle, then if you are an individual, you have taken a loan for the purchase of electric vehicle, interest payable on such loan would qualify for the deduction. Conditions are: loan should be taken for the electric vehicle, loan should be taken during 19, or loan should be sanctioned between these years. Assessee should be individual. Loan should be taken from financial institution, bank, or specified NBFCs. Can you see the condition here? One more additional condition here. There is NBFCs are also covered. Here the loan can be taken from NBFCs as well. I pasted it here. Okay. Please highlight banks or specified NBFCs. Period. Again, no such period of 8 years. Whenever you pay the loan, interest, you get the deduction. Interest payable subject to maximum of 150k. Interest paid, amount as actual interest paid, subject to maximum limit of 150k. No deduction under any other provision. If you're claiming deduction under this act, no other deduction under any other provision will be allowed. What is meaning of financial institution? Here see, banking company, bank of financial institution, deposit taking NBFC, or systematically important non-deposit taking NBFC. Right? So even here, loan is taken from financial institution. It is not a house loan, so housing companies will not be covered here. Including NBFC, deposit taking NBFC, and non-deposit taking systematically important. Question can come. Systematically important non-deposit taking NBFC. What is electric vehicle? You know, it is electric motor, traction energy supplied through the traction batteries installed in the vehicle. It should be electric regeneration braking system, while during provides for the conversion of vehicle kinetic energy into electric energy. Let's solve this question. Illustration number 13. This is a good one. Illustration number 13. Amount of loan. There are 4 persons, Mr. A, Mr. B, Mr. C, and Mr. D. Let's solve for Mr. A. Mr. A has taken loan from Housing Finance Company. The date of sanction is 1st April 2021. Arun Sagar, if it is hybrid car, I don't know. I'm not sure. It doesn't come in the electric vehicles. Hybrid car doesn't come in the electric vehicle. And what is hybrid car? You are talking about smart hybrid or hybrid cars, where I think the Maruti Suzuki offers those cars, right? Maruti is making those types of cars, right? I'm just forgetting the names of the models. I'm just forgetting the name of their famous model. Maruti Nexa and all, they're making it, right? So those types of cars they run on petrol only. Their battery is just high. It is not electric. They're not electric, okay? Electric cars will always have the green plate, green number plate. 43 lakhs amount of loan. Okay, amount of loan is yes, Anil. Amount of loan is 43 lakhs. Loan taken from Housing Finance Company. Date of loan sanctioned. Now, date of disbursement of loan. We see the date of loan sanctioned, not the disbursement date. Acquisition of residential house property for self-occupation. Okay. Acquisition of residential house property for self-occupation. That is for the residential house property. Tell me, the loan is sanctioned. Please, everyone, focus here. Loan is sanctioned on 1st of April 2021. Now, is this covered here? No. 1st of April 21 is covered here. We can take deduction of ATEEA. Vishakha note ATEE. The loan is sanctioned on 1st April 21. ATEEA. Right? Now, 43 lakhs is the loan. 45 lakh is stamp duty value. We check the stamp duty value or the value of the house. We check the value of the house. That is less than equal to 50 lakhs. Loan is, sorry, ATEEA is the stamp duty value. In ATEEA, we check the stamp duty value, right? It is less than equal to 45 lakhs. Correct? It is also satisfied. 9% is the interest. Can you calculate 43 lakh into 9%? What is the interest amount? 43 lakh into 9%. Everyone, please calculate quickly. 43 lakh into 9%. It is coming 3,87,000. 3,87,000. Tell me, up to 200k you can claim under 24B. Up to 200k you can claim under 24B. How much is left? 187k. What is the maximum limit? What is the maximum limit? ATEEA. The maximum limit is 150k. So can you see 187 is there? The maximum limit is 150k. So you will claim 150k. Clear? Second, Mr. B, they have taken loan of 45 lakhs. Loan is for residential house property. They have taken the loan from NBFC. They have taken the loan from NBFC. Is NBFC loan eligible for the ATE deduction? No, only the financial institution or including housing finance company. So the loan interest is 4,05,000 restricted to 2,424B, but ATEA would not be permissible due to either violation. The loan is taken from NBFC. The loan is taken from NBFC. And in fact, the stamp duty value is 48 lakhs. It is more than 45 lakhs. ATEA is not available. Third, 20 lakhs loan for the purchase of electric vehicle. The loan is sanctioned on Fund for 2020. It's fine. 20 lakhs into 10%. 20 lakhs into 10% is 2 lakhs. 2 lakhs. But the deduction is maximum 150k. 150k deduction will be allowed. How come 2 lakh 20,000, Lakshmi? The cost of electric vehicle is 22 lakhs, but the loan is for 20 lakhs. So you will take 20 lakhs into 10%, not 22 into 10. Then you have taken loan from public sector bank. The loan is sanctioned on 30th of March 2019. Is it eligible? Only previous year, 1st of April, from 1st of April 19 is it eligible. We don't see the disbursement of loan date. It is irrelevant. It is before 1st of April 2019. So it is zero deduction will be there. Zero deduction will be there. Right? So write some summary for the ATEEB as well. ATEEB. It is the loan sanction. Please remember it is the loan sanction, right? So it is interest on loan taken for. So it is ATEEB. I haven't written. Is that? I have written. Yeah. It is for loan taken for purchase of electric vehicle. The financial years are same. 19, 20, 21, 22, 21 to 20. Right? 19 to 20. No. There is the addition. There are 4 financial years allowed. It is still 21, 23. It is. Please make a note here. It is 4 years here. Here it is 3 years. So let me write here. Here it is 4 years. So I will add 22, 23 as well here. Right? It is for the again for the individual. It is again for the individual. Now the limit is 150k. No time limit of 8 years. This is the interest series. 4 sections in the interest series. Okay. Can we remember the section numbers now till now? Everyone. We have done 4 sections in ATC series. Let's remember the section numbers. ATC, we know certain payments. After ATC, we have done ATCCC. It is for certain pension funds. Then we have done ATCCD. It is for the pension scheme. ATCCH also we have done for the Agniveer scheme. 4 sections we have done. Then we did 3 sections for the disease D. 80D is for the medical insurance premium. Next is 80D dependent disabled. 80DDB is for the specified disease, right? Then we discuss about 4 sections on the interest. 80E for the education loan. 80 financial year 1920. Sorry, financial year 16-17. Then 80EA is for the financial year 1920, 2021, 22, 23. Sorry, financial year 1920, 2021, 21, 22. Then 80EEB is for the electric vehicle. It is for financial year, 4 financial year starting with financial year 1920, 2021, 21, 22, 22, 23. Clear? Are you confident till here, everyone? I hope you are confident till here. Next, we are going to do a very, very important section. We are going to do a very, very important section. ATG. Section ATG. By the way, you guys have how many classes in a day, by the way? In intermediate, how many classes you have in a day? In a single day? 2 classes, okay. Arun Sagar, 4 classes or 2? Okay. Okay, one morning and one evening. Okay. Yeah, revision classes separate. Fair enough. Two revision classes every day. I think not every day. It would be some. Yeah, it would be for September 26 exam, upcoming exam. There would revision classes would be very small, right? Okay. Now next section is ATG. ATG is for the donations. Audit insights every Saturday and Wednesdays. What is this audit insight? Maybe I'm not sure. That is you study the audit subject, or they give you the insights from the previous exams. Donations to certain funds or charitable institutions. If you give donation, ATG series is for donation. If you give donation, ATG. ATG is for any SSC. That is for any SSC. If you give donation to certain funds and charitable institutions. Okay, Anil, got it. Thank you. Donations to certain funds or charitable institutions. If any assessee is giving donations, please make a chart. Section 18. If you give donation to the funds or you give to institutions, there are two types. You give donation to the funds or to the institutions. If you give donations to the funds, there is no limit. If you give donation to the institutions, there is a limit. If you give donation to the funds, there are two types of funds. One with a 100% deduction, another one with a 50% deduction. Then if you give donation to the institutions, one is it is with limit. Then there are two types of funds. It is 100% and 50%. 100% and 50%. Leave some space here. We will come to it. We will fill the gap. So let's go to the book. Firstly, let's focus here. Let's suppose if I have given donation to a fund, whatever donation I have given, I can take the 100% of it as a deduction. Or if if you are giving donation to the fund, it can be 50%. Whatever donation you give, 50% of it you can get as a deduction. Let's come to the book. ATG. Deduction in respect of donation to certain funds, charitable institutions, etc. An assessee who pays any sum as donation to eligible funds or institutions is entitled to a deduction subject to certain limitations. from the gross total income. It is NESSE. In case of individual HUF, this deduction is available only when you follow the old scheme. In case of individual HUF, AOP, BOI, artificial juridical persons, deduction would be available if they have exercised the option of shifting out of the old regime, right? They would not be available to the in the concessional tax regime. In the new tax regime, it is not available. In case of companies, cooperative societies, there are special sections for the new scheme. There are special sections for the new scheme. If you opt for the special provisions for 115 BA, BAB, then this is not available. It is available only when you pay under the normal provisions of the act. Clear? Only when you follow the old scheme, whether be it for companies, individuals, then that is available. Quantum of deductions. There are 4 categories that we have given. First, then if you will go to the next phase, there is second, third, and fourth category. That is what we have created here. This is category number 1. This is category number 2. This is category number 3. This is category number 4. Okay. Category number 1, 2, 3, 4. Now, see, it is in category number 1. Wait, until I will explain, then I will take the queries. In category number 1, donation qualifying to 100% deduction without any qualifying limit. So what I had written, there is no limit. Second, it is limit. Now it is 100% deduction. Donation qualifying for 100% deduction. Now there are the name of 24 funds. It is not practically possible to remember all these 24 funds. Now I'll give you a logic. If it is any national fund or any central fund or any state fund, you will give 100% deduction, except for one, that is PM drought relief fund. If you will see in the second 50%, there is only one fund, Prime Minister Drought Relief Fund. If it is PM Drought Relief Fund, then only it is 50%, otherwise you will take 100%. So it is 50% PM Drought Relief Fund, otherwise it is 100%. Now see here, it is the National Defense Fund, Prime Minister National Relief Fund, Prime Minister Earthquake Relief Fund, Africa Public Contribution India Fund, National Fund, right? Approved university or educational institution of national eminence, chief ministers of Maharashtra, then any fund set up by state government, Gujarat Earthquake Fund, like Jila Sehkari Samiti for the improvement of primary education in village. It is right, Jila Sehkari Samiti. It is the national blood, any state government fund for the medical relief to the poor, Army Central Fund, Andhra Pradesh, the National Fund. Then you take the Chief Minister's Fund. Then you take National Fund again, then National Fund again, right? Then Fund for Technology Development and Application by the central government. It is the national again. Then Swachh Bharat Kosh, again it is by the central government. Clean Ganga Fund, again it is by the central government. National Fund, Prime Minister's Fund, right? So can you see, if we remember, it is not practically possible to remember all 24 names. So it's better you remember like, if it is a national, central or state fund, then it is 100%, except for one, that is PM Drought Relief Fund, that is 50%. I hope it's clear till here. Are you with me till here, everyone? Right. That's why I've highlighted those names as well, right? What is drought relief? What is a fund, Anchal? What is a fund? Fund is for used for a specific purpose. What is PM Drought Relief Fund? That is a fund that is used to be used in drought situations. If there is any drought in any area, if any financial assistance is to be given, that will be given from the PM Drought Relief Fund. A fund is used for a specific purpose for which it is designated. Next is donation qualifying for 100% deduction subject to qualifying limit. Now these are subject to a qualifying limit. Now what is the limit we will study? 100%. Now there are only two here. One is government or approved fund institution for the promotion of family planning. Then some paid by the company or donation to the Indian Olympic Association or other association established in India as may be notified by the government of India for the development of infrastructure for sports and games or sponsorship of sports and games in India. So can I write here, if there is a fund for sports development, if there is a fund for sports develop, sorry, first was family planning. If there is a fund for family planning or for the sports development, then that is 100%. And all other institutions will come here. Anil, I have already said, why are you going ahead of me? I said qualifying limit, I will explain. Donations qualifying for 50% deductions. Any other donation, any institution or fund established in India for charitable purpose, government or any other local authority for utilization of charitable purpose, other than promotion of family planning, because that is covered in 100%. Any authority for the housing accommodation or anything, any corporation, any renovation, repair, any other fund is there for the charitable purpose or anything else. Other funds are covered here. Other funds or charitable institutions are covered here. Okay. Now, do you know the harsh reality of this deduction? Anyone has heard the practicality of this deduction? This deduction was very famous earlier. See, why the government has stopped giving the deductions in the new scheme? Do you know? Because it was very difficult for the government to verify. The people were taking unnecessary deductions. That's why the government said, okay, in the new regime, we will not give any deduction except three, which they still want to promote. Right? Now, what used to happen in the ATG was there were fraudulent activities happening. Sridhar, I will do all the questions. Just hold on for some time, okay? If at the end, if you are left with any query, please do ask. But let me, in between, let me complete, okay? I haven't explained the qualifying limit, so I cannot tell you any questions on this, okay? Now, there were many fraudulent activities happening. What used to happen is people used to give donation to the charitable institution and then they used to take it back in cash. And then they used to claim the deduction as well. Let's suppose I am a salaried person. I am a salaried person and I give donation Now I give donation in the bank account. I am able to claim the deduction. I am able to claim the deduction. But then I take that amount back in cash. These types of fraudulent activities were happening. So that's why the government has tightened these provisions a lot. Okay. Next. Now we need to do one question, I think. Give me 1 second. Let me see. Uh, Now there are some other conditions. There are some other conditions. What are those conditions? One is, what is this limit that I am writing again and again? That is 10% of adjusted GTI, adjusted gross total income. We will do a question on this. Then donation in kind is not allowed. Donation in kind is not allowed. Then donation exceeding 2000 should not be in cash. Up to 2000 only be in cash. Okay. Do you remember in section 40A3, there is a condition of account paycheck? In section 40A3, there is a condition of account paycheck in the PGBP. There is no account paycheck condition here. In the medical premium as well, they also says other than cash. There is no account paycheck condition here. There is no account paycheck condition here. Right? Clear? So these were the conditions. These are some of the conditions. Now let's go to the book. What is qualifying limit? Qualifying limit says you take the 10% of the adjusted gross total income, right? Donations are first adjusted for 100% deduction, then adjusted for 50%. Compute the adjusted total income, GTI. We will compute the GTI as reduced by. We will compute the gross total income first. Then we will reduce all other deduction except ATG. Can you see? We will take the gross total income. We will reduce for all other deductions except ATG. Then we will take the short-term capital gains. We will reduce the special rate income as well. We will reduce ATG deduction. We will, from the gross total income, we will reduce all deductions except ATG, because ATG we have to calculate how we can deduct it. Then short-term capital gain except of 111A, 111A, special rate income we remove, and the long-term capital gain of 112 and 112A, special rate incomes we remove. Then any other income for which the tax is not payable, exempt income. Exempt income is anyways not included in the gross total income. You adjust the gross total income by this, we call it adjusted GTI. You take the 10% of it. You take the 10% of it. Then you take the lower and all. Then we will study by an example. This we will study by an example. Now, I have two examples to do. See, we will extend the class a little bit today, okay? We will extend the class a little bit today. ATG, we will cover it up, okay? I'm giving examples. Let's see it. Give me 1 minute of time. Okay, give me 1 minute, okay? I am pasting an example here, okay? Now, you will not be able to note down the example. You can leave the space for the example and do the solution with me, okay? This file will be with you. You can copy paste the example later on. That is a comprehensive example we are discussing. If I will invest the time in if I will give you time to note down the example, that is not worth it, right? No, casual income is not required to be removed. Arun Sagar. Mr. Ramesh, aged 44 years, resident, has provided you the following details for previous year 25-26. He has opted out of the new regime. It means he is following the old regime. There is income from salary, that is 8,40,000. Let me give you side by side. Income from salary is 8,40,000. Then there is an income from house property. This is 6,10,000. Then there is a long-term capital gain we have. That is 9,30,000. Then we have short-term capital gain on land. That is 2,10,000. This short-term capital gain will be taxable at which rates? This short-term capital gain will be taxable at which rates? Amar, 12.5 is the long-term capital gain. 112. This will be taxable at Dhanlakshmi. Again, is short term is 28 for the short term here? That is for 111A. Is it a 111A? Is it equity share? It is not even 30, it is at slab rates. It is at slab rates. Right? Then there is the next item is I'm giving you is interest on securities 1,80,000 TDS deducted. Now this concept of TDS, have you, I think you haven't done, do you know this TDS concept here? Okay, no, I will tell you. See, whenever bank is giving you the interest, they give deposit some amount with the government. That is TDS. The gross income will be two. Now you have received 1,80,000 in your bank. This is the net, and TDS deducted as. Now it means your income is 200K. Your income is 200K. Next is interest on securities. We are done. Now, next comes. He paid 75,000 to the PPF and life insurance, 20,000 for self, 15,000 for the 20,000 for the self, 15,000 for the spouse, 10,000 for the independent daughter, 5,000 for the independent son, and they pay for the father as well. They're paying for the father as well. Father is 12,000. They paid 12,000 for the father. Do not try to copy right now. Just understand it. Okay. 12,000 for the father. Now the policy was taken on 1st of April 2015. Now which limits will apply? Which limits will apply? ATC, which limits will apply? Policy was taken after 1st of April 2015. Amar, it is the not medical insurance, it is the life insurance. ATC will apply. 20%, 15%, 10%. Which one will apply? Policy was taken after 1st of April 2015. Policy amount is 1,20,000 in each case. Clear? Next is he paid the medical insurance 10,000 for the self, 6,000 for the spouse, and 4,000 for the independent daughter. Make it independent. 4,000 is for the independent daughter. Is independent daughter covered? Is independent daughter covered? And 18,000 is for the senior parent. It is for the parent who is senior. Independent daughter is covered. In 80D, 80D is independent daughter covered. You forgot. In 80D only the dependent children is covered. Remember like this, here only childrens were there, dependent, independent. Here, childrens were dependent, parents were parents dependent, independent doesn't matter. Right? Parent is senior. Right? This is for 80D. Now he has taken higher studies loan. Higher studies loan is in which section? Of his son. Interest paid is Sorry, there were some typos here. I'm just correcting it. Interest paid is 50,000, 28,000, and principal paid is 50,000 per annum starting 2022-23. You will take 80E deduction here. Next, he has a dependent brother. He has a dependent brother suffering from mental disability. Which section you will take? He had spent 24,000 on its treatment and rehabilitation. 80DD. 80DD. Next, he has paid the following donations. PM National Relief Fund 25,000. PM Drought Relief Fund 10,000 in cash. He has donated to government for family planning 2 lakhs. You are required to compute the deductions under chapter 6A and total income. This is the full-fledged question we are discussing. Is everyone clear with the question? Let's solve it. With this, we will also study the ATG limits, and we will also revise other things. Now, Mr. Ramesh, now we are doing the computation of income. Computation of income for Mr. Ramesh. If he is 44 years old, he is resident. Mr. Ramesh, 44 years old, resident. And the assessment year is? Or we can write assessment year. So you can write previous year or assessment year. Previous year is 2025-26. Clear? Let's start it. Income from salaries. First, you will take the income from salaries. 1 second. How much is income from salaries? 8,40,000. Then you have income from house property, 6,10,000. Then you have income from capital gains. There is a long-term capital gains. 112A. This is income from salary head. It is already computed. Let me write the word here, computed. Long-term capital gain 112 9,30,000. Then it is 2,10,000 STCG on land. STCG land 2,10,000. How much is total? 11,40,000. Then is income from other sources. Interest on securities is given. The interest on securities net is 1,80,000. You have received 180,000 and TDS was deducted to 20K. Next chapter we will discuss TDS. You will understand in more detail. The income will be 1,80,000 plus 20,000. Two lakhs. How much will be the total? Let's do it. It is 27,09,000. It is gross total income. It is gross total income. Are you with me till here, everyone? We have calculated the gross total income. Next, we will reduce deductions under chapter 6A. What all deductions are there? There was section 80C. We are writing the final, then we will make the working notes. Then we have 80D. We have disabled as well, 80DD. We have education loan as well, 80E. Then 80G. Then there is 80TTA, that is very common in every case. Please do write in every case. We will discuss it. 80TTA is not applicable in this example because it is on the saving bank loan, not on the interest on securities. Not applicable here, but it is very common in most of the scenarios. Students tend to forget it. So it's better you write in every case 80TTA. Right? 80TTA is most common in every case, so better write it. If it is not available, then you say it no. Then we will calculate total income. We will calculate total income. On the total income, we calculate the taxes payable. And from this, we reduce if any taxes have been paid. So there is a concept of TDS, TCS, and advance tax that we will discuss in subsequent lectures. Then we calculate the net tax payable. That is the entire tax computation we do. So we will calculate the total income. Total income we will calculate. Then TDS payable, tax payable we are not going to calculate. We will see it in the subsequent lectures. 20,000 was the tax deducted here. So I'm writing here. The net tax payable will be this much. This is the entire tax computation. Clear? Everyone noted down till now? I'm waiting. Please note it down quickly. Okay. Now let's start working notes of deductions. Working notes. This way we can also see how you present in the exams, right? Working notes, it is for deduction under chapter 6A, right? We can write here assessee is eligible for all deductions since he has opted out of default regime. Let's calculate section number 80C first. For 80C, they say he pays PPF 75,000. He has paid in PPF 75,000, right? PPF is 75,000. He has paid for the life insurance of self. Is self allowed? Is life insurance for self allowed? Right? It is for self is allowed. Spouse is allowed. The independent daughter, dependent both allowed. Dependents are allowed. Is for father allowed? For father it's allowed or not? The answer is no. For father it's not allowed. I'm just pasting it here. PPF was this much. Then they have paid life insurance. They have paid for life insurance. That is for self, spouse, then independent daughter, then dependent son, then father. Now I have said the policy amount is taken on 1st of April 2015. Policy amount is 1,20,000 in each case. So every time we will apply 10%. Now they have paid for self 10% of 1,20,000 is 12,000. They have paid 20,000, but the limit is 12,000. How much will be allowed? 12,000 will be allowed. 10% of 1,20,000. Like calculate it here, 1,20,000 into 10%. Again for spouse as well, 12 or 15, whichever is lower, 12 is allowed. For dependent daughter, independent daughter, 10,000 or 12,000, whichever is lower, 10,000. For dependent son, 5,000. For father, it's not allowed, 0. Right? So you can write here, since policy is taken on 1st April, after 1st April 2012, maximum permissible deduction is 10% of 1,20,000. Sum is short. The total amount here in ATC is this, not here. The total amount in ATC is this much, 1,14,000. How much is the maximum limit? 1,50,000. So how much deduction allowed will be? How much deduction is allowed? 1,14,000. 1,14,000. So I'm writing here 1,14,000. Clear? ATC is clear. Next is ATD. Note it down. I'm just giving you 30 seconds to note down. Okay, next. ATD. ATD is for the insurance. Now, this is the only line given for ATD. Let me take it here. He paid medical insurance of self. He has paid for self. He has paid for spouse. Is independent daughter allowed? Independent daughter allowed deduction? The answer is no. 0 is allowed. For self, 10K, 6K. Now, what is the maximum limit allowed for self? Now, parents will cover separately. For parents, separate deduction is allowed. Now, no, they are 44 years. Maximum limit is 25,000. So the allowed would be 16,000. Right? Next, for the parents, parent are senior, 18,000. What is the maximum allowed? 50,000. How much is deduction allowed? 18,000. The answer would be, so how much deduction total is allowed? 16 plus 18, 34,000. So it will be 34,000 here. Right? This way, all your calculations will not be messy. So you've written it here, right? You're solving it in the working notes. Next, DD, dependent disabled. He has a brother. Okay, before that, he has taken a higher studies loan, interest paid 28,000. Starting from 20 to 23, till 8 years allowed. So 25, 26 is allowed. Interest pays 28,000. So we can take 80E for 28,000. It is within 8 years. Then next is, he has a dependent brother, he has a dependent brother suffering from mental disability. Is brother covered in disabled? Yes, brother and sister were also added in 80DD. He has spent 24,000 on the treatment. So how much will be allowed? Flat 75,000 will be allowed. Correct. The Lakshmi. Correct. Flat 75,000 is allowed. Next left is 80G. For that we will do a calculation. Let's solve 80G. For 80G, whatever information we are having, these are the 3 donations they have given. Let's do it. These are the 3 donations that we have given. Now tell the PM National Relief Fund, is it without limit or with limit? So first is A. It is the no limit deduction for 100%. This is National Relief Fund, that is covered without limit. PM National Relief Fund, 25,000 deduction is there. Second is PM Drought Relief Fund, again no limit deduction, but that is for 50%. Drought Relief Fund is in 50%, right? So, but it is in cash. Is cash allowed? I said more than 2,000. I said more than 2,000 should be paid in cash, should be paid other than cash. So not allowed since paid in cash. Right? Then the third one would be for government, for this planning, family planning. Third one is with limit, and government planning is in 100%, 100%, with limit 100%, right? If it is with limit and 100%, then if it is with limit and in 100%, now you calculate adjusted gross total income. What is gross total income here? What is gross total income? 27,90,000. You reduce other deduction other than 80G, less deduction other than 80G. So you will take up the old deductions. You will take 114 plus 34 plus 75 plus 28. It is coming 2,51,000. You will reduce the special rate income. Special rate income, in special rate income you take the long term or short term capital gains. Long term capital gains 112A was there. If you will take the long term capital gain of 112A, how much? Short term was a normal capital gain, right? 9,30,000. You reduce it. So how much it comes? 16,09,000. This is the adjusted GTI, adjusted gross total income. The next, you take the 10% of adjusted GTI. Maximum limit is 10% of adjusted GTI. 10% will be how much? Sorry. You take the 10% of it. 1,60,900. How much is donation? How much is donation you have given? Donation given is 2 lakhs. You take the lower of the two. Lower of the two is this much. Now, how much donation is allowed? It is subject to 100% limit. It is subject to 100% limit. Now the 100% of 169, 160, 100 would be 160, 900. Write an important note here. Okay, this note is for you. Okay, maybe I'll write it separate. I will write it separately. Right? Now what will be the total ATG deduction? Now this is subject to limit, but above are not subject to limit. So A plus B plus C, 25 plus 0 plus 160, 900. It is 1,85,900. Please note it down if you haven't. You're able to note down with me, right? Everyone. 185, 900. The total is coming this much. Now my total income would be this minus this. It will be 23, 53, 100. Correct? Clear till here? Is ATG calculations clear? Write a note here. In case of qualifying limit, we first calculate 10% of adjusted taxable in adjusted GTI or donation given or donation, whichever is lower. Whichever is lower. After that, we apply 100% or 50% as applicable. Let's give an example. Amar, just hold on it. I'll show you. Let's suppose there is a donation subject to 50% limit. There is a donation with 50% limit. I've given as 3 lakhs. 10% of adjusted GTI is 1,20,000. 3 lakh and 1,20,000. Calculate deduction. One way to calculate is you take lower of the two. Sorry, you take 50% first. 50% of deduction you will take as 1,50,000. 3 lakh into 50%. And then you take then you take 10% of adjusted gross income, 1,20,000. Then you take the lower of the two. This is the incorrect way of doing it. You need to take the donation first. Donation is 3 lakhs. Donation is 3 lakhs. Then you take 10% of adjusted gross income. Then you will take the lower of these two. It will come 1,20,000. Then this deduction is limited to 50%. Now then you will take 50% deduction. This will be 50% of this. The answer would be 60,000. This is correct. This is how you do it. Clear? Are you with me till here? Let's come to the book. Other points. Where the deduction has been claimed and has been allowed under this deduction of donation, the same will not qualify under any other provision of the Act. If once donation is claimed, you cannot claim under any other provision of the Act. Double deduction is not allowed. Donations in kind not allowed. No deduction if you are paying exceeding 2,000 in cash. You need to pay unless you need to pay other than cash. The deduction under ATG can be claimed whether it has nexus with the business or not. Whether you have business with nexus or not, the deduction can be claimed. Right? Next is, let's suppose sometimes you make the donations through employer. You ask the employer to withhold and make the contributions. Nexus is the connection. Nexus means the connection. Let's suppose this donation is having no connection with your business. Still you can get a deduction, ATG. We don't see normally when an expense is allowed to the business, when it is in excess with the business, when it has connection with the business, right? But here, even if there is no connection with the business, still the deduction is allowed. See, sometimes what you do, let's suppose your salary is 10 lakhs, you want to contribute 50,000 to the PM National Relief Fund, because this happened, right? You want to contribute to the PM National Relief Fund. Let's suppose your employer contributes on your behalf 50K to the fund. Employer contributes on your behalf 50K to the fund. Now you get a salary of 9,50,000 in your bank account. Now this employer deposits on your behalf, you will get a deduction for it. Employer deposit on your behalf. Now for this, they say the government is not going to issue any separate certificate. Whatever the employer is certifying, we will deem it as correct. As per circular number 2005, dated 12/1/2005, in cases where employee makes donation to Prime Minister Relief Fund, the Chief Minister Relief Fund or Lieutenant Governor Relief Fund through their respective employers, it is not possible for such funds to issue separate certificate to each employee in respect of donations made to funds, as contributions made to these funds are in the form of consolidated check. An employee who makes donations, let's suppose 50 employees are contributing. So what the employer does, 50 into 50. Let's suppose 100 employees are contributing 50,000. 100 employees are contributing 50,000, right? What the employer will do? Employer will directly deposit 50 lakh rupees in the fund. Now employer will give everyone, okay, this I have deposited for your account, your account, your account. The fund will not give separate certificate. Whatever the employer is certifying, we will deem it as correct. An employer who makes donations under these funds is eligible to claim the deduction. Employee, it is therefore clarified, claim in respect of such donation as indicated above will be admissible under section ATG on the basis of certificate given by the drawing and disbursing officer of the employer. Whatever the employer is giving you certain certificate, that is accepted. The fund will not give a separate certificate because these amounts are deposited by the employer as a consolidated check amount. These are not deposited. If there are 100 employees contributing, employer is not going to deposit 100 checks with this fund. They will just deposit one consolidated amount. So they say we are not able to issue individual certificates, but whatever the employer will certify, we will deem it as correct. Next, this is about the new requirement. The claim of the assessee for deduction in respect of donation made to institution or fund under point 1 to 4 above, donation for 50% deduction subject to qualifying limit. It means fourth number, deduction for 50% subject to qualifying limit. These one. Now for this, they say in the return of income for assessment year, he will be allowed on the basis of said donation furnished by the institution by the prescribed time authority or person authorized by the authority. Now what happens practically? Yeah, employer will certify for everyone because employer will issue form 16 as well. Anil, employer will also issue form 16. So anyways, they certify for every employee. See what happens is, let's suppose you donate 50,000 rupees. Let's suppose you donate 50,000 to an institution, ATG institution. We call it ATG institution. The fourth category, you donate 50,000 rupees. Now, whenever you donate 50,000 rupees, now what is the exact scenario? The institution will give you a form called 10BD. You receive a form called 10BD. This is the form you need to maintain in your records to claim the deduction, right? But they need to give the prescribed income tax authority will be allowed. Now this form you need to keep, but this deduction will be allowed subject to verification by the CBDT. They have a risk management strategy. They have implemented systems. From that, the cases are selected. Now, this can be verified by the CBDT. That's what they are saying. This can be verified by income tax department. Clear? Now, illustration number 14 is again very good example. This is his homework. Please do it. In the next session, if you have any queries, you can discuss it. Now, this calculation in this is very important. This calculation is important here. This ATG calculation is very important. We have done some examples. We have done an example on ATG. Plus, I have also told you this thing, right? Plus, let's suppose if you have 100% and 50% donations, both, that is already written in the book. If you have both donations, 100 page number 56. If you have both donation 100% and 50%, you will first use the 100% donation, then you use the 50% donation. This is the hierarchy you will use. This example, illustration number 14 is very, very good example. Please do it yourself. If you face any query, I can surely take it up in the next session. Clear? ATG, very good section to deal with. I hope whatever we discussed is clear, everyone. So we are keeping it till here for today. Yeah, Sushmita, what is the doubt? You can ask your doubts. ATDD. What is the page number, Sushmita? Anil? Okay, point number 6. This is dependent definition. Is that you are asking, Anil? Anil, quickly confirm. You are asking the definition of dependent. Okay, Anil is asking in ATG. Sushmita, I'm coming to your query. Point number 6 is, see, what they are saying, if any person is giving donation, right, they get form 10DB. This is the prescribed form. Now they say this deduction is not automatic. If the CBDT wants, they can verify this deduction. You need to have all the documents in place. That is the simple meaning. Anil. In the return of income for an assessment year filed by him will be allowed on the basis of information relating to such donation furnished by the institution to the prescribed income tax authority. They file 10BD form to the income tax and they also give it to you. They match the forms. They match the forms and only the deduction is allowed. So Shmita says DD, what if 2 or more person are having the disability? One of them, if there are 1% disabled, 2% disabled, there is a flat deduction you get in ATDD, 75 or 125K. If anyone has severe disability, you can take the higher deduction based on that 125K directly. If anyone has severe disability, you can take directly 125K, even if other have normal disability. Fair. Clear, Sushmita? Okay. Any other query? 80DDB case. What is 80DDB case? It is 40,000 or 1 lakh, right? 40,000 or 1 lakh. Now, again, there as well, if you are incurring the expense for the person with severe disability, sorry, there the 1 lakh is for senior, 1 lakh is for, I just forgot, it's for senior, right? 80 DDB, 1 lakh is for senior, not for the disability, right? Sridhar, I couldn't get you. Specified case 1 lakh is for senior, 40K for rest, correct. Sridhar, normal disability, which amount basis exempt? I couldn't get you. And everyone, please join on time. I see some of the students joining late. You can skip some of the portion, then you will lag behind in the entire session. Clear? Any other queries anyone has? Okay, now what I will upload today, this payment is, I will upload this sheet as 30th June today. I am not uploading the summary sheet today. Let's complete the summary sheet in the next session, then we will complete it, okay? We will complete the summary sheet in the next session, then I will upload it on the portal. Next session we have is on 2nd of July, right? Day after tomorrow. Again at 7 a.m. Thursday we have next session, right? Okay. Final call for if any queries, else we are good to go for today. If specified disability is deducted but normal disability is, yeah, disability means whatever is defined. If your disability is coming is which is not defined, then it's no deduction. Yeah, Arun Sagar, what is the doubt? Quickly. You have already extended a lot today.
Sir, actually, I have a doubt. In few deduction under HUF and as well as individual also they can claim. In this case, if the one of the member is some disabled, in that case, HUF they're going to claim that person, and if I spend some another independent, both person that can be claimed. Means I'm not asking the same expenses. I spend some on the other. Assume that my sister is a disabled. I spend on some money, and HUF spend on my brother. He also disabled. Both can be claimed.
Yes. For same expense, you cannot claim that two places, but yeah, for different expenses, you can claim. HUF will claim for the sister in your case, and you will claim for the brother or whatever it is, right? You can claim it.
Okay.
That is the way of planning, right? So this is called planning. Within the laws, you are trying to plan. You're not avoiding any law, right? Clear? Okay, then thank you very much, everyone. Team, we can close the session.
Thank you, sir.
Okay, thank you.
Recording stopped.